Hello and welcome to the Commodity Currency Buzz. I am Navneet Damani and I am going to give you a brief run-up about the commodity and currency market over the last few weeks. What's wrong with the SVB bank, what has impacted the market and what is going to be the take for the next couple of months on the commodity currency space. Well, over the last few days, there are a lot of events which are dominating the market. Firstly, we have the SVC bank event, which has kind of had an upper hand on the market. Secondly, we had inflationary numbers which were pretty sticky, and then the job markets which are a little weaker than expectation. Now, what's wrong with the SVB bank and what is kind of having an impact on the market? SVB bank is the 16th largest bank in the US with assets of about $210 billion. It's a largely tech-funded bank which invests in a lot of startup, and over the last few weeks and months, they have been having cash crunch, because of which they had to liquidate some bonds. The M2M on these bonds were to the tune of $1.8 billion, and which led to the market getting more jittery about these banks, the sustainability of these banks, and the funds started to dry up. Now, since the funding started to dry up, market chatters begin to talk about the losses as well as the weaker funding, and which led to a fall in stock price of the bank to the tune of 60%. And in off-market settlements also, market started to correct very sharply. Now, this is kind of a bank run event where the bank ultimately had to be bought down and probably had to be liquidated. Now, US Treasury bonds are something which has seen about a 450 basis point jump in the last few months because of the successive rate hike we've seen from the central bank, and that has led to an impact on a lot of central banks and a lot of banks in the US. Now, the Treasury Secretary was quickly smart enough to jump and take hold of the situation, and the US credit default swap had started to shoot up very sharply. Now, to prevent a domino effect which was already happening in the stock market, they announced a slew of measures to cash trap banks. They will provide short-term liquidity, and President Biden himself intervened to show about the robust strength of the banks as well as the kind of strength the economy has got, and the future of the investors who are holding money with these banks. Now, this market was waiting for an impact and an event for the last few months, because Russian and Ukraine crisis were done and dusted, and the market was anticipating some kind of a new event, and this was a perfect recipe. This led to a sharp jump in gold and silver prices of about 5%, and dollar index cracked from 106 levels to 103 levels within no time. Now, having said that, what's happening on the US Treasury front, or what is going to be the impact on the banking crisis, it is too early to gauge. Is it a Lehman kind of a moment, or will there be probably more collapses or more pain in the system? Now, to top it up, the jobs market were pretty tight, but suddenly have started to see some kind of a weakness, and this could be a sign of weakness in the US economic scenario as well. Inflationary numbers, even after so many rate hikes, have been pretty sticky, and that gives a comfort, or probably we'll have to step back 2 steps and see that have the successive rate hike actually delivered what they wanted to deliver. Will it have a cascading impact on inflation in the near future, or are they inflationary very sticky and are here to stay? Now, this is going to be an impact on the commodities as well as the currency space, and we have an impending event on the 22nd of March where it is likely to be a possibly 25 basis point another hike from the US Fed. So the month started with a 50 rate hike possibility. Now it's a 25 rate hike possibility, and some participants also believe that it could be a no rate hike possibility. So the rate hike plus the commentary is going to play a very important role on the future of the commodities and currencies over the next, say, probably a couple of months, and we kind of have to await this moment, because we are pretty unsure, just like the previous Fed meet where there was a lot of clarity how the events are going to be unfolded. This one looks a little unclear, and the commentary as well as what are the actual deliverables will have a snowball effect on the commodities and currency market. I strongly believe that the dollar index from here weakness could be very limited, and probably the upside could be more, and that could have some bit of upper hand on the gold and silver prices. But having said that, any major correction is a buying opportunity, as we anticipate that another 5% up move in both gold and silver is impending from here. Talking about base metals have corrected from peak, and with the recent volatility in the dollar index and jitters coming from US and China, they have corrected even further. But fundamentals warrant something else, and I believe that most of them have corrected very significantly and are closer to buying levels. So you could probably, from a 2-3 months perspective, anticipate a buying momentum in the base metal complex. Crude oil prices have been pretty sticky between 72 for the WTI and 78 on the higher side, and finally they are breaking down on the fag end or lower end of the range. We believe that once this tide settles, maybe $2-3 of more pain could be in store for the crude oil prices, but don't see further weakness as we anticipate that US as well as China is going to have a strong demand, which is going to pent up demand and which is likely to keep the prices floating. So any major correction on the energy front also could be a buying opportunity. And as far the USD INR is concerned, we believe that 82, 81.50 are levels where market could come to briefly, but the larger trajectory is of a depreciating rupee, and 83, 84, 85 is where we see rupee comfortably sliding towards. That's all from my end about a wrap up of commodities and currencies. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.